All right, good day. I hope you are doing well. So today we are going to look at a question under company accounts. And the name of the question is, that's the first illustration under company. I will show you the question now. You see the question on the screen and we will go through before we tackle the workings and the main statement preparation. So we have Richberg Gold Limited was formed in the year 2017. The following balances as at 31st December 2018 have been extracted from the books of accounts after the trading accounts have been completed. So in this question, they've prepared the trading accounts. That is, they started with the turnover or sales, less cost of sales to arrive at a gross profit. So these three items constitute the trading account. So when you go through the trial balance, we have administration expenses, we have cash at bank and in hand, we have distribution cost, we have dividend paid. So dividend, the payment can be in two forms. The one that we've proposed, that is the one they haven't paid, and the one that they've paid actually. So in the trial balance, you see that they have dividend paid. That means they've paid some dividends, and which happened within the year. Furniture and equipment at cost 60. Accumulated depreciation for furniture and equipment, that is 36. Gross profit for the year is 150, and ordinary share capital, that's 100. Preference shares is 40. Profit and loss account is the same as income statement. That is the income statement balance for the year. If the balance is in brackets, therefore it will mean a loss. But this one, since it's 50 and it's not in bracket, it means a profit. So income statement brought forward. Then we have share premium account. I've already taken you through share premium. When you issue shares above its fixed or nominal value, the difference becomes a share premium, and we place this difference of premium in the account. So that's a share premium account. It's part of the equity because it's at the credit side. Inventory at 31st December 2008. So this inventory will be the closing inventory. By looking at it, the year ends, we are preparing for 2008 or 2018. 2018, so in the book it's supposed to be 2018. Inventory at 31st December 2018, not 2008. Then we have trade payables, we have trade receivables. Okay. Additional information, corporation taxes for the year is estimated at 24 million. Please, when you look at the trial balance, on top of 3 zeros, they are in thousands. So cancel this one and make it 3 zeros. So it should be 24,000. 2, furniture and equipment is depreciated at an annual rate of 10% on cost, and it is charged against administrative expenses. Meaning that when you charge the depreciation for the year, on the face of furniture and equipment, this year's depreciation should be captured and added under the administrative expenses. Or a dividend of 20 pesos per ordinary share is proposed. So this is a proposed dividend. 20 pesos per share. You go and check the number of shares we have in this question. So obviously, ordinary share capital is 100,000. So it will mean that the number of shares we have will be 100,000 if one share is equal to 1 cedi. It's just an assumption. So assume, always when the share price is not given, you can assume that it's 1 cedi equal to, or $1 or 1 cedi. All of the authorized share capital has been issued and fully paid. So when you say authorized share capital, the number of shares registered with the Register of Companies. So they are saying that they've been issued and fully paid. That means nothing is in arrears. They've called for all the money. We are supposed to prepare in a vertical form suitable for publication an income statement and the statement of financial position of Richberg Gold Limited. So let's start with the workings. The first workings, we have the corporation taxes for the year. And as I said, you can check through the workings here. The corporation tax is 24,000, not 24 million, because the 3 zeros on top of the trial balance is there. So if you make this one 24 million, your work won't balance. The next thing is furniture and equipment is depreciated. The moment you hear depreciation, you have to think of non-current asset schedule. So furniture and equipment, the cost was 60 according to the trial balance. Then accumulated depreciation was 36. According to the additional information, the furniture and equipment should be depreciated at a rate of 10% on cost. So 10 over 100 times the cost, which will be 6. You add it to the 36 to get 42. So the 42 is the total depreciation. You take it from the cost to arrive at the net book value of the furniture and equipment, which is 18. You have to also bear in mind that this year or the current year depreciation will be absorbed or added to the administrative expenses. That is the 6 that you computed for. So quickly come and adjust the administrative expenses. The initial balance, or the balance as per trial balance, or the balance given to us in the trial balance, was 65. We added this year depreciation, which is 6 to 8, making the total administrative expenses 71. The next item is that a dividend of 20 pesos per ordinary share is proposed. So since we know that we have 100,000 shares, we have to find the dividend, the total dividend for the year. So already they've paid for 6 and they are proposing 20 pesos per share. So we have 100,000 shares. 0.2 times 100,000 will give you 20,000. But since we have 3 zeros on top here, that is why I'm not bringing the 3 zeros. So 20 plus 6 will give us 26. But when you go to the statement of financial position, the dividend proposed becomes a current liability. It has been proposed, it has not been paid, and therefore it will be part of our current liabilities. So let's come to the main work. With the income statement, you have gross profit. You deduct your administrative and selling distribution costs. This is 15, this is 71. You add it, you get 86. 86 minus 150 will give you 64. Then this will give a profit before interest and tax. That is a PBIT, profit before interest and tax. Profit that you haven't deducted any interest or tax. So here, right after the profit before interest and tax, since we don't have any interest related item like preference shares, interest, any loan interest, you deduct the tax from it straight, making 24 from 64, you get 40. There's a profit after tax. That is a PAT, profit after tax. So after that, then you come to the ordinary dividend paid. When you check your workings, you can see that, or in the trial balance, the ordinary dividend paid was 6, and we proposed 20. So when you add it to it, will be 26. Is in the workings. 26 from 40 will give you 14. Then after deducting the 26 from 40, getting the 14, that is known as a retained profit. When you get the retained profit, you go and take last year's profit you got. From the trial balance, you see income statement or profit and loss at the our first January 2018. That is the same as income statement brought forward. You add it to this year's own to get the total income for the year. So 14 this year, 50 last year. When you add it, you get 64. This will be taken to your equity section because it's part of your finance buy. So equity section 64. When we are done, we come to the statement of financial position. That one we already know, non-current asset will come first. In this question, we only have furniture and equipment as our non-current asset, which is 18. Then we come to current asset. With the current asset, we have closing inventory, which is 130. According to the trial balance, we have trade receivables, which is 135. We have cash and bank balance, which is 30. When you add these 3 items, you get 275. 275 what? 275 cedis, or 275,000 because we have 3 zeros on top. When you add the total current asset to the non-current asset, you get 293. That is the total asset. Right after that, you come to the share capital and reserves. We have ordinary shares to be 100. We have preference shares to be 40. All these figures can be seen from the trial balance. Share premium account is 20. Then the only item that is not from the trial balance is the income statement carry forward. Income statement carry forward. The 64 was taken from the income statement. That's the total profit we got since we started the business. So last year's own was 14, this year is 50. So when you add it to it, will give you 64. Right after that, we come to the current liabilities. With the current liabilities, we have trade payable. We have trade payable. So the trade payable is 25 according to the trial balance. Corporate tax. The reason why corporate tax is part of current liabilities is that it is a tax we're supposed to pay, but we haven't paid. It's just an estimation that we've made in our income statement, so it becomes part of our current liabilities. And the proposed ordinary dividend, as I said, it is proposed, it becomes a liability you haven't paid. When you add these three items, you get 69. Then you add it to the share capital and reserve to get 293. So that is all for company. Company is not difficult, and if you have any issue, feel free to drop it under the comments or come to my personal DM. So I will post this solution right after this video together with the question. Bye.